Dame I gospodo, predstavnici medija.
Good morning, ladies and gentlemen, members of the Council of the Governor, esteemed members of the press, colleague economists. It is a great pleasure for me to welcome you here today at the regular presentation of the inflation report for the last quarter, that is, for the first quarter of this year. What has marked the movements in 2012 were large and volatile, with turbulent movements in all areas of economic flows. However, what is encouraging are relatively favorable trends in the first quarter of this year. We have had a significant weakening of inflationary pressures and inflation expectations, together with relative stability of the exchange rate. This should help return inflation within the target tolerance band by October this year. What's also encouraging is the acceleration of economic activity, as moderate as it is, but it is encouraging. What stands as a risk ahead of us is the uncertainty with regard to movements in the international environment and the pace and scope of fiscal consolidation at home. I will now ask Mr. Branko Hinic to give us a short speech and present the key findings of the May inflation report.
Thank you. Ladies and gentlemen, esteemed members of the press and fellow economists, receding inflationary pressures and moderate economic growth marked the beginning of 2013. We expect such tendencies to continue and to result in the return of year-on-year inflation within the target tolerance band by October and economic growth of around 2% this year. The economic downturn in the euro area continued in early 2013, and the projected start of economic recovery has been shifted to the second half of the year. The downturn for the entire 2013 is expected at around 0.3 to 0.4%. On the other hand, despite occasional turbulences, such as the one triggered by the Cypriot financial crisis in March, the tendency of easing the financial strain in the euro area still persists. Lower risk aversion in the global financial market, together with economic policy measures in Serbia, brought about a vigorous decline in the country's risk premium since September last year. MB, a risk premium indicator, currently stands at around 330 basis points, down by around 270 basis points from August last year. Following the period of relative stability in the first quarter of 2013, new appreciation pressures ensued, fueled by the European Commission's recommendation on the start of negotiations on Serbia's accession to the European Union. To ease these pressures, the National Bank of Serbia engaged in purchasing foreign currency in the interbank foreign exchange market. Fiscal consolidation is crucial to the maintenance of macroeconomic stability, as it is already certain that this year's planned budget deficit of